MACD indicator strategy. Settings on TradingView. You can use this actually on any platform, MT4, Thinkorswim, whatever you'd like to use. But let me show you this strategy. It's pretty simple, but it is deceiving. Most people do not understand it this way. And as a professional trader, you better understand this or you are doomed. More specifically, your trading account is doomed. So this is, by the way, this is a part 2 in the series. So I'll put the link to part 1 in the description below. All right, so what we discovered in part 1, just real quickly, was the MACD line is simply measuring whether these two moving averages are moving further apart or closer together. Thus, MA, moving average, convergence, divergence. That's literally all that it's measuring. It is very, very mathematical, completely objective and rule-based. And those two moving averages are the 12 and the 26, and they are exponential moving averages. So it does not measure trend. This was one of the big reveals in the last video. It is measuring the energy of acceleration between these two moving averages. So do not use MACD as a trend indicator. That is a common mistake. Blow out your account 100 times. And it's just, well, there's no reason to do it because that's not what the indicator measures. It's just that people often never deep dive into the indicator. It's not really that even deep of a dive. Here's another trading strategy that people will do is they'll say, oh, well, when the MACD line gets above 0, I'll go long. When the MACD line gets below 0, then I'll go short. And that also is a fantastic idea if you want to contribute to your broker's yacht fund. All right, if you want to contribute to your broker's yacht fund, that is an excellent trading strategy. And your broker will probably send you a photocopied Christmas card with all of their names printed on there, but not with original ink. So if that's what you want, that's exactly the strategy for you. Now, what does it mean? Again, I'm very literal when it comes to trading. I'm a very literal person. I trade concrete rules and I want to understand what I'm trading. You don't just, as most people do, say, well, I'm looking at this indicator and if the line goes up, I should buy. If the line goes down, I should sell. And then they go through a bunch of indicators, one after another, to see which one, quote unquote, works. You can't see, but I'm doing air quotes right now. And that's not the way to trade any indicator. The way to trade it is to understand what it is. So this line is the difference between these two moving averages, whether they're converging or diverging. Diverging meaning moving away, meaning there's price acceleration to the upside. So it's not measuring trend, it's measuring price acceleration. And the 0 line, what that is simply measuring is when the two moving averages are crossing. That's all it means. So when they cross, that means there's no distance between the two moving averages, no convergence, no divergence. They're actually equal, and therefore the MACD line hits 0. There's no distance between them. And then when it goes back up, again, the lines cross. Let me use a little, let's see here. There we go. People find these notations good, which I can totally get. So when the two lines cross, then it hits 0. So it's kind of a moving average crossover system, which I don't think are very good systems anyway. I think they're kind of ridiculous, but that's me. I'm never not controversial. But, think about that. If you're trading what everybody's teaching, which is not controversial, and if you're trading everything that's not controversial, then you're going to make what everybody's making, which is, well, again, contributing to their broker's yacht fund. So you don't want to do that. I don't want to do that. So you got to trade something that is not normal, no more air quotes there for you, and that most people aren't doing, so that you get what most people aren't getting, called profits. Hello. All right, so these strategies are terrible. But now you know what they literally mean. So let's look at this and let's say, okay, well, how can we make money? After all, that's what this video is about a MACD strategy to make money. So now we're going to add another of the elements of the indicator. Now we're going to add the signal line. All right, and you see I got it in red there. So what is that? What that literally is, if we go back to inputs, and again, stuff's all very simple. It's just a 9 period moving average of the difference between the 12 and the 26 exponential moving averages. That's what it is. So what it's essentially doing is it is smoothing out the jagged MACD line. The MACD line is the red line. The signal line is the MACD line is the blue line. The MACD line is the red line. And because it's a 9-period moving average of the blue line, therefore it's smoother. Because notice how this is kind of jagged. All right, the blue one's kind of jagged, which there could be some use for that as well. But what's important is, hey, let's look at the big picture here. Let's smooth out the noise, because these little jagged edges here, they could be noise. And let's smooth it out. And let's get the bigger picture, the meta pattern of, and what are we getting the meta pattern of? Test yourself. Go ahead and type into the comments down below, if you're brave enough, what is the energy of price action being measured by the MACD line, the blue line? Do you remember? Well, the red line, the signal line, is giving you the meta pattern of, and I'll just tell you right now, the acceleration of price action. So now that we understand that, we understand this is not measuring trend. And therefore, you would never use MACD as your primary indicator. Because before anything else, step one in all of trading, in any trading system, is determining the direction of the market. Because trades are binary. You either want to be long or short. Obviously, the market could be chopping sideways. In that case, we don't trade. So that's not part of our trading. We just stay out or we trade something else. But for actual trades, we either want to be bullish or bearish. We want to go long or short. We want to buy or we want to short. And that is told to us by trend. Trend is the extended general direction of the market. That is literally Webster's dictionary definition of that term, direction. So acceleration is not the first step in your trading system. Trend is. Once you establish what the trend is, up or down, or no trend, but for trading purposes, up or down, then we look to see, oh, is it an accelerating trend? Is this trend really taking off? Is it moving fast? Is it picking up speed? If so, I really want to take that trend. Why? Because that's where we're going to get the big profits. This will directly affect your risk-reward ratio by improving your reward. There are some trends that move up slowly and some that move up fast. We want the ones that move up fast because they make us, well, more money faster. Do you want to buy a slow trend or a fast trend? I want to buy a fast trend because I can make money faster, shorter period of time, market goes up quicker, and then I can take my money out, reallocate it to another instrument. Make sense? All right, if you have any questions about this, or you want me to talk about MACD anymore, or you just have some comments, you want to contribute to the discussion, feel free to type in your comments below. Oh, I almost forgot. Get my cycle indicator. So the other key, step 3, by the way, in a trading system, after establishing trend, after establishing acceleration, those are the first 2 in a system. Step 3 is timing. When do I get into that trend? You can't just jump in at any time. Otherwise, you could be chasing the market. And the way to avoid chasing the market is learn how to time your entries so you're buying low and selling high. Fortunately, I give away that for free to all my viewers. So go to indicatorwebinar.com. Sorry, you should see it there on the screen. Indicatorwebinar.com. I give it away for free. It's actually a common indicator already in your charts that I'm modifying. And there's a tutorial there as well. Because again, just like with this, just having an indicator in your charts like MACD. If I gave you my cycle timing indicator, my market entry timing indicator, it's not going to do you any good unless you know what it means mathematically. So you understand what you're trading as a professional trader. If you're going to put your money at risk, understand what you are reading on your charts. And then how to trade it after you have that understanding. That's what I focus on here at Top Dog Trading. And that's why I don't just give you the indicator, but I give you the education with it, albeit I give it to you all for free.